Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, as well as the key level for both the indices. We'll also be discussing on the main sectors in focus in trade today, as well as the next few trading sessions. First up, coming to the update in the global markets. So in trade yesterday, the US markets experienced a mixed movement for the second consecutive session as investors awaited the monthly jobs data. The S&P 500 ended on a negative note for the third consecutive trading session. The Dow dipped by 0.5%. In contrast, the Nasdaq closed relatively flat. Coming to S&P 500, the 50-day EMA zone, that is the levels of 5,470, will act as the immediate support. If the index slips below the levels of 5,470, it could trigger further selling pressure, potentially driving the index down towards levels of 5,400 in the short term. Coming to Brent oil, so Brent oil has ended on a flat note. The major trend of Brent oil remains bearish as it is hovering at a 13-month low. A sustained move below the levels of 72 could open the door for further downside, with the prices potentially falling to 69 in the short term. Coming to the dollar index, so the dollar index has ended on a negative note for the second consecutive trading session. Going ahead, it is likely to test the levels of 100.50 in the short term. Now coming to the update regarding our markets. So Nifty started the session with an upside gap on the weekly expiry day, but it could not hold on to above the levels of 25,270. The index gradually formed lower highs and lower lows on the intraday chart, eventually closing the day at 25,145 levels, posting a decline of 0.21%. Going ahead, the zone of 25,060 will act as the immediate support for the index. If the index slips below 25,060 mark, the next support is placed closer towards 24,950. On the upside, if we see the zone of 25,240 will act as the immediate hurdle. Any sustainable move above 25,240 would lead to a trigger towards the levels of 25,360 followed by 25,450 levels. Coming to the option chain data, this is for the next weekly expiry. So 25,200 has significant call open interest followed by 25,300, and on the put side if we see 25,000 has substantial open interest followed by 24,800 strike. Now coming to the update regarding Bank Nifty. So Bank Nifty for the second straight session remained confined to a tight 247 point range, forming an indecisive candle on the daily chart. Most noteworthy, the daily RSI has recently failed to sustain above the 60 mark, signaling a clear loss of upside momentum. Going ahead, the 10-day EMA zone, that is 51,150, will act as the immediate support. If the index slips below the levels of 51,150, the next support is placed closer towards 50,750. While on the upside, the zone of 51,700 will act as the immediate hurdle for the index. Any sustainable move above the levels of 51,700 would lead to a sharp rally towards 52,200 followed by 52,500 in the short term. Coming to the key market indicators, so on Thursday the volatility index India VIX dipped by over 1%. However, since the last couple of trading sessions, it has been oscillating in the range between 14.6 and 10.84. So a clear breakout beyond this range could trigger a significant directional move in India VIX. Coming to the advanced decline ratio, so despite the index ending on a negative note, the advanced decline ratio largely tilted in favor of the advancing counters yesterday. Coming to the key sectors in focus, so Nifty Pharma, Nifty Healthcare, Nifty Financial Services and Nifty Consumer Durables are likely to continue their outperformance in the short term. On the flip side, if we see, Nifty CPSE has continued its southward journey after giving a symmetrical triangle breakdown. Apart from this, Nifty PSE, Nifty PSU Bank, Nifty Metal are likely to continue their underperformance. Hence, we recommend to avoid these sectors for now. Coming to the FII DI data, so FII sold to the tune of 688 crores while DIs bought to the tune of 2,970 crores in trade yesterday. That's it for today's edition of the podcast. Thank you for regularly tuning in. Thank you and have a happy trading session.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.